Hey traders, this is my weekend video. So basically some things I'm looking at here on our SPY. Really nice little pop here. We do have volatility coming in really hard, and yeah, the money skew has come in really hard too, suggesting big money is trying to hold prices into the earnings run up starting this week. So definitely I want to keep that on watch here. We do have a gap right below us on SPY. Come tomorrow, there is a fairly decent chance that we're going to feel this gap tomorrow on SPY because if the bond yields continue what they're doing right now, the TNX, okay, we closed at 1.6. 16 is basically 1.6%. So, I'm thinking we're running up here to the 1.7%. Okay, so that's my target here, 1.7 here on the TNX on these bank earnings and stuff. And we do have um, a 10-year auction this week, so that's another thing driving force to help support these bonds to the upside. Okay, and so just definitely keep that on watch going forward here. The bonds are really catching a nice little bit into these auctions hitting the tape this week. Okay, so basically the 12th, so that would be Tuesday, we had the 10-year auction. So that suggests to me that the bonds will catch a bid tomorrow, or that the yields will catch a bid tomorrow. And not necessarily going to get the 1.7%, which could be. I know in the after hours they're up considerably as well, so it wouldn't take much. But at any rate, they're probably going to keep a bid under the yields until the auction is buy the rumor, sell the news possibility going on here into Tuesday. Okay. Uh, we got 2 o'clock in the morning UK unemployment Tuesday. Of course, tomorrow we do have Evans speaking at some sort of meeting at 6 o'clock tomorrow evening. And the very important at 7:50 p.m. Japan PPI. So we're going to kick off the week with purchasing the purchasing price index out of Japan. That's going to be our first month-on-month indicator of inflationary pressures on the manufacturers. So just keep that in mind here going forward. Monday, really important, in my opinion, what's going on there on the PPI. And we do have more of that coming even on Wednesday. So we have manufacturing production month on month there out of the UK Wednesday. Germany CPI, so that's going to give you the consumer, what prices are being passed on to the consumers in Germany at 2 o'clock a.m. And then we have at 8:30 in the morning U.S. CPI that's passing on prices over to the consumer, inflationary data. Okay, and then I do want to point out at Wednesday night, China comes out with their PPI and CPI numbers year on year. The year on year ones, they're not nearly as relevant as the month on month, but we do have even more inflationary data hitting all day Wednesday. So that's what's driving yields like they are here with all this information hitting the tape this week. Okay, and then Thursday we have jobless claims at 8:30 in crude oil inventories, or that's Wednesday, I guess. Both of those jobless claims and crude oil, and then that was on 10/14. Yeah, 10/14 Thursday because we had a holiday, I think. And then 10/15 we have month-on-month retail sales. So we're going to see how strong the consumer was come Friday this week, along with University of Michigan, their sentiment indicators, which are probably going to be pretty bad. They're at 10 o'clock there Friday. Okay. And then, so I just wanted to float that stuff around there and let you guys know about that stuff. Okay, the Qs. If I zoom in here on my Qs now, we'll get an idea of what's going on here. This is an accumulation zone down here on the Qs, showing a lot of relative weakness on the Qs versus the other indices. So basically, we are above next week's weekly pivot. but we're below the monthly pivot. So definitely keep this one on watch for a possible move to the downside. That would be our problem child going into the week, in my opinion, here on our technology, especially with what's going on with the yields. Okay. And then on the bullish side would be your IWM. Okay. And possibly getting a move back up to the market make move high this week as these earnings hit the tape. So as far as earnings go this week, since I've got the IWM on here, and give me 1 second here, and I will go through them here. On Tuesday, we got Fastenal, and then starting Wednesday, we got J.P. Morgan. Okay, and then Thursday, Bank of America, Citi, Domino's, Morgan Stanley, USB, United Healthcare, Walgreens Boots, Wells Fargo, Alcoa, and then Friday we have Schwab and JB Hunt. Okay, that is our earnings for this week, your main earnings this week. And it's really starting to heat up. Come next week, it really starts heating up with a lot of earnings coming out. I do want to point out, though, as of Friday, they were starting to position themselves 3 weeks out on earnings. So it's the week of the 25th. It's 3 weeks out. That's what it is. And on that week, I did want to point out here, the one that got a lot of fire, General Motors, to the upside. We had the breakout. We're about 3 weeks out, so they are really starting to heat up here on General Motors on the earnings run up. Okay, Ford was another one on the earnings run up, about 3 weeks out. Both General Motors and Ford report on the same day. Okay, some other ones. See here. Then we had, if you go back over here to my, as you can see, pretty much everything that was really flying on the 1 hour acceleration bands. It was by far the energy sector, the XLE, and those are momentum. The crude oil space is just on fire right now, and you got a very strong momentum move in the crude oil prices and the energy sector in general. And so those aren't necessarily earnings run up plays. That is a momentum trade on the XLE going into. That's what happened this week. Okay, so definitely keep these on watch here going forward. For like I said, that's not necessarily, those could come back down to earth anytime now on these energy plays. I'd much rather be trying to do a short scalp on these energy direct plays than trying to push the envelope to the upside. Okay. And then let's see here. 1 second here. Okay, some things that I want to mention here on the downside that they were positioning Friday. Comcast. So, you're looking 3 weeks out. They're starting to position themselves for Comcast. And then you also have, what was the other one? 1 second here and I'll find it. Another one, Charter. We're breaking down on Charter for into the earnings. So this is the flip side. They're taking profits into earnings on some of these ad spaces. So there you go. Comcast, Charter got hit. Facebook also 3 weeks out now on Facebook for earnings. And we're seeing the other FANG names starting to run out, because you look at Google, who's also in this space. They're actually trying to break Google out to the upside. So you have to be really careful. The issue I have with Facebook, given the whistleblower complaint and as fast as it's coming down here, I am kind of leaning to think that we are on the cusp of the Justice Department launching an investigation on Facebook and their internal practices. So I would not be surprised to hear this week the Justice Department coming out and launching an investigation on Facebook. So that's something you have to really think in the back of your head. Is that something you really want to trade? Honestly, the real support's down here, the 301 area. So you actually haven't even completed the pattern. I don't know for sure if we can come down or not, but the news was horrible on Facebook last week, and it was another one having a lot of trouble and struggling last week. Okay. Um, so another one that I've been watching here, the Boeing bull flagging here. So you come down in here. Uh, we're trying to bull flag up here for a breakout of trend to the upside. Probably getting up into the 235 area if it can get going. The biggest issue I have with Facebook, we have all that PPI information hitting the tape this week, and aluminum prices are just taking off to the roof. Okay, and so that is what you notice how it couldn't hold a bid. It's doing that 3 week out thing as well, but it couldn't hold a bid. So I am more apt to think this is a short than it is a long going into the earnings season, just because of the PPI data that's about to hit the tape. So uh, just keep that one in the back of your head. I'm an active trader on Boeing, but but that's another one to keep on watch. Bristol Myers is another one. So some of these going in, you're about 3 weeks out on earnings on Bristol Myers. They destroyed it Friday and came down really hard here about 3 weeks out on Bristol Myers. So keep that one on watch. You have to really go out in 3 years now to see what the heck they're going to do with that. Uh, yeah. So we are coming into a trend support with about 3 weeks out into earnings. So uh, really a broken chart. So be careful on that one going forward here on Bristol Myers on the bearish side. And I do have a theme, and I've mentioned it to people in the room and stuff. The 20-year war is finally over with, and the earnings season has not factored in any of the impact from that. And I expect some significant military budget cutbacks post the end of the war. And I think they are going to hit the tape. So you have 3 weeks out here. You got 3M reporting, you got Norfolk Southern reporting. Uh, I think all of these defense contractors are entering a bear market. Um, so Northrop Grumman's reporting. So a lot, and then you have Boeing also in aerospace and defense as well. So keep that in the back of your mind. I think we're going to get a wake up call when it comes to the aerospace defense sector. I think that is you're going to see after the earnings season hits. You're going to start seeing a dramatic underperform if I'm right. As not only has your inflationary pressures for the components, but if I'm right and there is a significant pullback in military spending, which by all accounts, there is no reason why they are not going to do that. That's something to keep on in the back of your mind going forward. Okay. So, some quick takeaways I got going here. You see how I got a Fibonacci retracement, and it's based off of the uh, uh, monthly pivot all the way up to the next possible retracement high. Okay. That would finish our retracement to the upside. If you draw your fibs based on that way, basically, you're basically halfway between the quarter end. Okay. So last month's close, we are literally halfway between that or going up to this higher area. So you're literally stuck right in the middle of the range, and you really don't know which way it's going to go. We do have a gap right below us, so it's anybody's guess which way this thing can go. I do suggest, at the upper end, you do have the 200 SMA 4 hour right up here near the highs. And plus, with what we've seen in volatility and the skew, suggests that they are going to do their best to push prices higher. So I just want to float that idea. We definitely can come back down lower. We are slowly but surely resolving to the upside based on price. I don't know if that's going to continue or not, but that is something I do want to float out there. And we have had a fairly decent reset on our MACD as well. So on the 30-minute here. Okay, because we are below the monthly pivot on the NQs, I actually have a bearish Fibonacci retracement here and a bullish one right here. Okay, so I'm looking at it from two different standpoints. Your 200-day SMA 4-hour is up here. Okay, so keep that one on watch as well. But you are below the quarter, like I said, the monthly pivot. So you gotta definitely have the bearish side scenario on the table here for your Nasdaq. Okay, and so basically, if based off of my levels here, to complete this pattern for the untested retracement to the downside, okay, you are targeting market maker move low for this week on tech. So you got to keep that in the back of your mind here. This is the logical target to the downside, and that would put us at market maker move low. Now, on the bullish case, okay, our target is beyond this week's expected market maker move high. So that would be one rip your head off move to the upside if that were to happen. Not only would we cross over the monthly pivot, but we would be exceeding our weekly expectations. I don't know which way is going to play out here. I just know that they've really brought volatility in. So you have to be mindful of both of those scenarios. Okay, I have the bullish Fibonacci retracement drawn out here for the upside. Our next untested 100% retracement is up here at the 2290 area. Keep that one on watch. Assuming crude were to maintain a bid and the banks were to maintain a bid after the news comes out, obviously 2290 could be in the cards. Okay, we did have some people, some really good traders suggesting that crude has topped out Friday. I don't know if that's the case or not, but so I definitely want to keep this on watch going forward here. We are above our our monthly pivot point as well, so we are on the bullish side of trend. So just keep all those factors going around in the back of your head, and we have been putting in a very long base here. If you go out over a year now, basing out here for a very, very, very long time, you would think at some point in time we're going to break out above this long consolidation area on the Russell, or break up or break down. It's hard telling which way, but way yields are going right now suggests that the banks are going to be breaking out to a lot higher prices, and that's supportive of the Russell to break out. Okay, so just keep in mind what you want to keep an eye on is this downtrend line right here, and you can actually buy on the dip here. If we could run up into that downtrend line as these bank earnings start hitting the tape, that would be a positive thing. Okay, so just keep that one on watch. And as you can see, we're going nowhere with our MACD. It's trying to decide what it wants to do here, and it just cannot discern which way to take prices. Okay, so that's everything on the video. If you like it, please like it, and leave comments below if you guys are thinking of some stuff that I didn't mention in these videos. I know I got a lot of notes on my videos, so just I try to document as much as I can on my notes. That way I understand what's going on in detail. Okay. So thanks a lot, and I'll try to see you next week.